for everybody. And I know she really enjoys the speed and tempo of answering those questions. So we're going to do the best we can to catch as many as we can. But right now, I am going to let Robin take off.
Okay,
Go
Hogue,
for it, Robin.
thank you so much for hosting all the time. I really appreciate it. And I had to say one thing. I've never seen so many wonderful women trading. When I started in the business in the 80s, I had to date myself, but in the 80s in the trading room, it was 100 guys and me. And 3 years I
Mm,
was there, I only saw one woman. And I used to watch Maria Bartiromo on the trading floor get bumped around and hit by everybody on the trading floor. She was the only one there. And it's so wonderful to see so many women. And women make better traders than men do, psychology wise. So it's a great thing to see. And you've got some wonderful women in the room. And today with Anne Marie and Deanna, they gave some great comments. And I just want to say, it feels good to have you guys around. Okay, so the topics that Hogue recommended, and one that I want to put in there is how professionals can consciously recode the way they learn and operate, and how to turn unconscious habits into intentional patterns that serve performance rather than sabotage it. So, and then my third one, I'm going to be talking about stops, not trading the stops, but psychologically managing it, because in the coaching sessions I've done recently, they all pop back to managing the stops. And there's different things I want to talk about in relation to stops. Okay, so how professionals can consciously recode the way they learn and operate. So, depending on how fast your mind works, will depend on how fast you learn things. And when you can learn by reading it, saying it, writing it down, and rereading it, goes into your mind faster than if you read it once and you think you have it. You don't. So if you're looking at the trading screen and you're seeing something that you never saw before, like we're at all-time highs, that's a new situation. I haven't, we don't go through that often. Summertime is another group of things before any numbers get released. All those little tiny things are you should be capturing in your notebook every day. And I've said this many times, keep a notebook and write 3 new things you learned every day, one liners, and then reread them in the morning. So when you write them, look at them, reread them, and in the morning, then they start to sink in. You'll eventually get down the page and you'll eventually say, oh, I got that now. But there are instances that don't pop up that often. So that's what's important. The more you can write, reread, look, even say it, because you're using all your senses, your eyes, it's going in, that goes through one neural connection through your ears if you're saying it. Um, and if you're saying it, you're feeling it in your mouth. So it's sensing. So you're using all they're called submodalities. And so you're using all of them, and that makes the neural connection stronger. The more layers you have, the stronger it gets. So that speeds your learning curve. When you write down those distinctions during the day of what you're seeing, that's helping you learn. I also suggest that in the beginning of the week, you pick one area that you focus on and write the distinctions for those. And I classify distinctions are nice things to know that help you trade. I classify rules that are things that protect your cash. So a distinction would be um, would be um, when Trump announces something, I find that the market has a shift. And we'll talk about that in the stop area. But he's doing so many things with tariffs right now that you've got to be very careful, very careful that he doesn't announce something and then it throws the market. I'm just putting my phones away. and he can affect the market. He The other day it was crazy, and then of course with Powell, um, Powell not giving in to him. There's a distinction with learning because we don't want to preconceive what the market's doing. It is what it is. So your indicators have to tell you what's happening in the moment. You've got to read the market. So when Powell came on, we had a huge move during that. And in the old days, I've noticed we have a divergence between how the Fed used to react to certain um, indicators in the economy and how the president functioned. And in the old days, they were a little bit more in sync. Now we have the Fed reacting as it did in the old days, but we have a new president that's running the office completely differently from the way the old days are. So they're in divergence, and Powell's not Powell's not giving in. It's clear that he's not giving in. So he's going to run it the way he wants it. So when Trump has these announcements of these tariffs, you're going to get these moves. So write down what happens when news comes out and what your rule is, maybe, for protecting your cash during those times. Write down the distinctions that you've learned when news comes out or news is about to come out, numbers, CPI, um, um, unemployment, anything that has numbers. Write those distinctions down because they don't happen often, and that will help you learn. And you can have those sections in your book. But every day, write 3 new distinctions and mark any rules that you need to have. So that will speed up your learning and have you lock it in to your memory faster than just reading it once and think you got it. So when you go through these recordings, if you go through the recordings that I've done, it takes you 7 times before you will get everything that's in the recording. You'll only comprehend 40% of what we're talking about today. And your 40% is going to be different than Anne Marie's 40%, Hoag's 40%. Everybody's 40% is different because your mind accepts only what you need in the moment. So whatever you need, you're going to hear. So when you go back in time and review the recordings, you'll hear it and you'll go, "Oh, I don't even remember her saying that," because you didn't need it at that time. So reviewing things over and over is another way to increase the learning because it takes you multiple times before it gets in there. So that's another way to lock it in. So
It's probably
that will
why
that will
whenever I
get
read a trading book, I have to read it several times. And I've
yeah,
always suggested to people to do that. There's so much information in there. You're not going to catch it all the first time.
absolutely.
You got to read it a few times. Great stuff,
I
Robin. Go
mean,
ahead. I apologize for
think
interrupting.
about no, that's okay. Please interject. Think about how many screens you're looking at, how it reacts, how the screens react in different situations. I mean, we have so many different combinations that we have during the day, and we have to take all that information. We have to sort it out mentally, and we got to figure out how to get in and how to get out. So we have a mental. I'm going to call it a word salad for lack of a better word. We got a word salad going out around, and we've got to sort it out and make a decision. So making a decision comes very quickly. If it comes too quickly, then your emotions are taken over. And so we don't want to have a FOMO and have you rushing into a trade because you're pulled into the trade emotionally. We want you to think, measure what you're doing, enter the trade where you're supposed to, and then go from there. So another way, and I'll talk a little bit more about that in stops. Okay, so this next topic was how to turn unconscious habits into intentional patterns that serve performance and rather than sabotaging it. So if you're rushing and jumping into one trade after another, you're emotionally getting, I call it hooked, into the market, and you're being seduced. And it's the addictive side of trading, being pulled in there. And you really want to avoid that. That's unintentional, an unconscious habit. If you have that, you could be dealing with a block. And I know I talk about this all the time, but blocks are one of the major things that traders deal with. And if you're emotionally hooked and you're being pulled in, I'm afraid I'm going to miss that trade. I'm afraid I'm not going to make my money back. I'm afraid that I'm entering at the wrong time. So any of the blocks stem from an emotional fear. Any emotion whatsoever means you have an emotional block. And so the solution to that is, of course, you can get coaching and get the block removed, or you can do what I call a solution process. So this is getting to how we create intentional patterns. You take your challenge that you're having, you figure out what the solution is, and then you take action. And so I've talked about that many times: problem, solution, and action. People get stuck at solution. They know the problem, know the solution, but they don't take action to fix it. And you have to take the "I'll go until" attitude to find the solution. If the first solution doesn't work, you got to find another one and try it. If that solution doesn't work, you go to the third one. You keep going till you find it. And again, I've done this in the past. Always stop after a losing trade, go to problem, solution, action to fix that losing trade. Do not take a second trade, because that's going to install the unwanted habit. That's going to, every time, I call it three strikes, you're out. If you're getting hooked in and you're taking three trades and all of them are losers and you haven't changed anything, then you're going to lose again and it'll continue. That's an unwanted emotional reaction. You don't have a baseball player go to the plate, miss the ball altogether, take a second swing, miss it again, and during practice, the coach comes over. Come on, you've got to pick up your arm. You've got to do something different. I was engaged to a pitcher, so I know all this baseball stuff. So, um, so, and have it change. If he doesn't change it, he's actually locked into his body the pattern that doesn't work. So you do repetition over and over on trading in a winning trade to lock in a good pattern. You can look at the winners that you have, and look at what you did during the winning trades, and write down as much detail as you can there. Then that will increase your learning, and it will allow you to repeat the good pattern. Maybe in examining a winning trade, you'll realize what you were missing on the losing trade. And so that will allow you to make the modification. Um, Always take the action. That's the main thing. So I'm looking at it. I'm getting hooked into the trade, and I went through the hook once before. But let's say I'm exiting too quickly. This is a very common problem. I get into a trade, it starts working in my direction, and all of a sudden there's a pullback, and I get scared I'm going to lose the money I've got. I've moved my stop. This is going to lead me into the stop area. I move my stop, and it goes up a little bit, but it comes down, it hits my stop, and it turns around and it goes right where I thought it was going to go. How many people have had that happen to them over and over and over? If I had a dollar for every time I heard that, I'd be a millionaire, because it's one
Not
of the most
me.
common things. And not me either. So
I'm just
the
kidding.
key thing, the key thing is the reaction and noticing what you're doing. So in that scenario, I'd be looking at a couple things. What's the problem? I'm I keep getting stopped out, and I get into the trade, and when I enter is good, but I'm moving my stop too fast, too quickly, and I'm not letting it work enough, and then it takes me out and it goes to where I want to go. So you want to examine in that area, what's the distance of your stop And can you move your stop with some confidence and certainty so it doesn't take you out? How much, look at how much it pulled back. So, this is the distinction when it goes up in your direction and it has the pullback and it wiggles and waggles there for a little while and it comes down. How much did it come down to hit your stop? What was the distance? And then make your distance a little bit larger so you have the room for it to work. Because trades don't go straight up, they just don't. They can go straight down, but they still will wiggle and waggle. Why? Because if you're going down and all the sellers come in there, you're going to have buyers come in. They're going to close and take their profits along the way, and you'll get that wiggle back up. So I call when they have these wiggles. I call sometimes it's a breath. So if it goes up, 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 we have buyers coming in, and then we have a little dip because they closed their trades and locked in profits, a little breath, and then it goes up, 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 and that's what it's been doing, hitting new highs. Up, 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 breathe, up, 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 breathe, and then we get those people that insist on, oh no, it can't go any higher,
There it is.
but it does.
Right.
But it does. Can't go any higher. And I can't tell you, I bet you a whole bunch of you say, can't go any higher than this. Can't go any higher than this. But it does. We're in an area that doesn't happen often or didn't happen in the past, certainly not during Biden, and going up, up, up through new highs. And with Trump doing all the things that he's doing in the business and the economy and tariffs, um, we're having numbers. I mean, Microsoft hit a huge number. He had huge, huge increase today. I mean, just enormous. And we don't never had moves like this before, like this massive moves. With AI coming into the business and all these companies getting into AI, it's going to fuel their growth and their numbers, and it's going to fuel what's happening in the markets. So you've got to be ready. So notice on the stop where how much it comes back, give yourself room, and then try it. If that number doesn't work, look at it again, see how much you have to pull it back, maybe some couple more ticks. Do that. Problem, solution, and action. Take an action. If it doesn't work, find a new one. And that's going to increase your learning curve and start increasing the pattern of performance instead of losing. Okay, sabotaging. That's a whole separate subject than just um, intentional patterns.
Robin,
Sabotaging,
can I bounce a
yeah,
couple of things off of you though about
sure,
what you just what you just went through? When you're talking about
yes.
unintentional trades, right? Jumping into
Mhm.
trades out of emotion, those kinds of things. Would you also use the word impulse for those unintentional trades? I mean, the impulse is like, okay, I'm going to miss this trade. It's an emotional thing. You're jumping in early or whatever it is. Could you use impulse as a word for that as well? And that's a
There's
word
a
we use
whole
a
bunch
lot.
of words.
Yeah.
Impulse, um, seduced into the trade. It's the addictive side or the addictive behavior in the trading business. And we all get it. We all get tempted. We see something or somebody says something in the room and we're not there and we didn't know what was going on, but somebody says, oh, something is running or something is moving or it's finally taking off. Something is said in the room, so you jump in. So it's an impulse, and the plan that you normally had has you be pulled in from an impulse. It could be something you heard, something you saw. It could be
Uh-huh.
just that you're doing it over and over because you can lock in a, an addictive pattern and get pulled in. The fear of missing out is just big. I mean, everybody gets FOMO. It's a terrible disease, but it
Yeah.
gets us pulled in and happens over and over. So there are multiple words. Anything that is making you do something you don't want to do is
Uh-huh.
the challenge. That's where you have to stop. Or again, you'll repeat it. And I've mentioned this before. I'm sorry for being redundant, but these things are important, and they have meaning in the moment. You repeat patterns. Your body loves patterns. It lives on patterns. It's secure with patterns. It's more confident with patterns. But in the trading environment, locking in a bad pattern is dangerous, and
Uh,
it costs you money. So our body is doing one thing that it does normally, but in the trading environment, it can work against us. It can work in our
right.
favor if we're locking in winning patterns, but it can
Hmm.
work in a negative way and do the sabotage if we're doing it in the negative way and repeating the losing pattern. So that's where you have to be careful. You have to control
Yep.
that. And so the control of that comes from doing the opposite of what you were doing and finding an action. And if that doesn't work, finding a new one, finding a new one, finding a new one. And I've had traders that were doing coaching, and they, again, would get to the problem solution, could define that perfectly, and then they never went through to the action. And that's probably the biggest thing, even in our lives. So we have a challenge in our life. We know what we're supposed to do, but we don't do it. And so we get stuck in the solution. We get stuck in knowing how could I not do this? How could I not make that change? I know this is hurting me. Why can't I do it differently? Why am I constantly doing the wrong thing? And that goes through your head. But that story in your head is not working for you. So I always say do the opposite. And what could you do differently? Is thinking that way pulling you in a forward direction, or is thinking that way have you stuck, or has it is it going in the backwards direction? So I'm going to leap into the stop area, because I found a couple things during the week that a couple of my traders were doing, and it's related to stops. For all of you that are new, and I define new as under 10 years. If you're under 10 years trading, you're new. You're new. If you're under 5 years, you're really new. New is new. There's a boatload of information that you have to find out. And everything in trading changes. Everything from the 80s when I was trading doesn't even exist anymore. So
Hmm.
you have to constantly learn. That's why I love the question, how can you recode and increase your learning? Because you have to learn every day. I'm learning every day. If you stop learning and think you've got it, you don't have it.
Then you're
You
in
don't have
trouble.
it. You're in
Robin, if I can
trouble.
interrupt you for a second,
Yep.
we are having some problems with the platform, folks. We are aware of it.
Okay.
The engineering team is working on it, and as always, Top Step will make it right for everybody. We we are well aware of it. Just relax. Listen to Robin. She's talking about some really important things here, and again, we're aware of it. We're working on it, and we will make it right for everybody. So, all right, let's go back to Robin. You were you were
Okay.
just about to go
So
into
I'm going to just talk a teeny bit
sabotage.
about the
Go ahead,
sabotage
please,
and the
please.
stops, because um so if you're new to the game, the thing I'm saying to new people, and if you're trading 10 years, I'm sure you're doing this, you must have a hard stop every time you take a trade. Every time you take a trade. There's not one high-end trader, multi-million dollar a year trader, that ever traded without a hard stop. You have to get into the pattern of using it, because as you go up the scale and make more money, you have more at risk if something goes against you, or Trump has an announcement and the market drops. You can't have 50 contracts on and have it turn on you. You have to have a hard stop to protect your capital. So a hard stop should always be in there. I don't know what platforms you're using, but I suggest exploring a bracket trade. And a bracket trade puts three orders in at the same time. It puts your entry price, it puts your profit target price, and it puts your stop,
Hmm.
hard stop in. All three at the same time, one click. Speed in trading futures is critical. So you want that to have happen. Once they're in, you have flexibility to move them, but use bracket trades. So if you're new, find out how to do that and use bracket trades to have a hard stop. Always trade with a stop. Then the next thing for more experienced traders, what I'm finding is they get comfortable with the stop and they use the stop as their safety net and they wait for it to hit the stop if the trade's not working to maybe have it turn around and prove they're right in the trade. So you shouldn't use the stop to prove you're right. If the trade is not working and you know it's not working and you're looking at your indicators from where your entry is and it's just not going in the direction that you want and it's heading
Get
towards your
out.
stop, get out of there. Get out. What's the worst thing that happens? You have to get in again and you get in at a better price? That's the worst thing that happens. But
Mm.
traders I'm finding with experience are holding on to their strategy because they're in the pattern that the strategy always works. And when it doesn't work, they try to prove they're right and they wait for it to hit the stop. And they're giving back more money than they need to when they know the trade wasn't working earlier. So for experienced traders, you keep adjusting your trade in the moment. And I have my favorite question: what's really happening in the moment that has you reevaluating the whole market and your position based on what you want to do in your plan? And if it's working, you stay in there. If you have things that confirm it's going to have a little pullback and maybe it's a little breath, then stay with it. But don't stay with it just to prove you're right. And so a lot of traders do that to prove that they're right. Um, and that's a condition that happens a lot. So that's on stop. So for new people, always have a hard stop. For experienced people, don't rely on that stop to be the thing that's going to prove your trade right or wrong. Manage the trade during the time and the exit if it's not working. Okay. So now we're at right at the half hour. So you can start putting your questions in there. I can talk a little bit more about moving forward in when you do the problem, solution, and action. Make sure it's pulling you in a forward direction. So if you're addressing how can I not lose at the next trade? How can I not lose at the next trade? That's focusing backwards. Focus forward. How can I make money at this trade? What could I see differently that would allow me to stay in the trade? So many of you have written in your questionnaires, I get into a trade, it's working, and I get out too soon. So, what could you see that would allow you to stay with the trade, have more confidence in the trade, make more money at the trade? Maybe you scale in, maybe um you have added one two in there and you start with one. I like to do one as a test and then I add when it's going in my direct. I like to see what the market's doing, and then if it's working the way I want, I start adding, and then as I'm getting out, I start scaling out. And I do it that way. Everybody does it differently. You have to do what works for you. So you can scale in or scale out, but look at different things that would tell you where to exit the trade. Maybe you see somebody in the room exiting at a higher place than you exited and they saw something. So ask in the room, what did they see specifically that allowed them to stay with the trade? Did they see volume? Were they watching in the dome? Were they seeing time and sales? Were they seeing a moving average? What did they see? A level. What did they see in that moment that allowed them to stay um, in that trade? And then as you're staying in, that's when you can move your stops up and then wait and move your stop up and wait and take as much profit off the table as you can. moving and thinking forward, not how can I move my stop and keep my money, or how can I not lose at this next trade. So when you're focusing on how can I not lose at the next trade, that's the I'm don't think of the color blue, don't think of the color blue. You're focusing on losing. How can I win at the next trade? What could I do better at the next trade? It's not just positive thinking, it's the words that you're conditioning your brain to think as you're in the trade. The words you're conditioning your brain. Watch out for how you're doing your self talk during the trade. That's the most important part. Because nobody's there to check you. I'm not there to tell you you're saying the wrong words. And so you have to catch them yourself. When I do coaching, people will say words that they don't even remember they're saying because it's so locked into their subconscious memory that they're just regurgitating it. So be careful of how you talk during the day. Forward thinking questions, positive words going forward. How can you win? How can you make a trade better? What could you see differently? What are the distinctions? What are the things that help you trade? Anything like that in a forward direction. Is it pulling you a forward direction? Okay, let's go to I think we're calling this rapid fire now. I think
Yeah,
rapid
yeah.
fire
Well,
questions. Okay,
I like
rapid
that. We're
fire.
just gonna take a quick look through the markets here, just briefly. The equities
Okay.
swept yesterday's lows and are seeing some pretty significant buying coming in off of that. The S&P is currently trading 63.97 half. Nasdaq currently trading 23,438. Uh,
Oh,
Crude
that's what I
oil
needed.
relatively range bound, still holding around 69.43, and gold with another bounce off of that weekly kickoff low, currently trading 33.4730, but not really seeing very much momentum in either direction at this time. For all intents and purposes, gold is closed for the regular trading hour session for the day. The tilt, we've got 70% long in the ES, 75% long in the NASDAQ. A lot of buyers coming in off of that low. Crude oil, 59% to the long side, and gold pretty much just mixed, 54% to the short side. All right.
Okay,
So,
leave that up for a
Robin.
second. Leave that up for a
Yeah.
second because this is showing a perfect example on the Nasdaq and the ES, the breath. It came down, 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 down on the right side, and then there's a breath.
Hmm.
Down, 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 and now it's breathing. So what you don't
Yeah.
know
So,
in this moment, is it going to rotate and go back up, or is this just a breath? So you have
just
to
a pullback.
be ready for either one. It could do either
Hmm.
one. I don't know what it's going to do. I have other things that help me decide what it's going to do. It's hitting major levels at the bottom and support levels down there. But that's an example of a breath. On the way up, going up where the circle is on the left side, the green, when it went up, 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 that big long move up, it had a teeny bit of a red there where it pulled
Hmm.
back. It went up a little bit
Hmm.
more, a couple candles, and then it had a little red candle again. Up, up, up,
Hmm.
up, up, and then the sellers come in to lock in their profit. Up, 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 and then the sellers come in. So you have a breath in either direction, but it will go. Um, and this is a great place to put a Fibonacci. When you have a big long area like that, running a fib on that whole section will give you an idea of what they're doing. All the big guys have a tendency to use Fibonacci's. All the
Okay.
institutions, the hedge funds, they love fibs. So that's another thing that could help you with where is it going back up when it reverses, and we don't know what's going to happen here. We have an hour and a half left in the trading day. So we have
Right.
time yet, and it could be a total reversal or it could be a breath and head down again because we've had a lot of up days. So it's getting really primed for some down moves here. So we have to be ready. Um,
All
and
right.
so, okay, questions?
Thanks, Robin. Okay. Now, you mentioned you should have a hard stop, right? Uh,
Yes.
Jim Dalton agrees. He says that you should have a stop in for sure, but you should try and never hit it. What you're talking about would be more of a catastrophic stop or just something to make sure that if something goofy happens, you're protecting yourself but your stop that you're talking about isn't necessarily at the point of invalidation of the trade. You're
Hmm.
placing a stop just to make sure there's something in, but you're managing the
Safety.
trade. Yeah, you're managing the trade cognitively to say, okay, if it gets to this level, that's where I'm going to get out. I'm not going to wait for the stop. That's
Exactly.
the point of invalidation. Because there was one
Yep.
question here, and it's from our good friend Mohammed. He's like, how can I exit before the stop and the worst thing can happen? What we have something here we call lennying a trade. It's just
Hmm.
over managing a trade, whether the trade's
Hmm.
going your way, maybe you trail your stop too close, maybe you get out before you really get to anywhere near your target because you're scared it's going to come back and it's going to take your money away. So we call those lennying. It's from Of Mice and Men. You read Of Mice and Men probably. You remember the
Hmm.
character Lenny who likes to pick up furry animals when he loves them, but he plays with them so much he kills them.
Right.
So
Right.
that's what we do. That's what some people do to trades. And uh, part of the question to that is, okay, so we've got the trade on, we've got our catastrophic, I call it a catastrophic stop, but you don't want a catastrophic stop. You just want something beyond where you're actually going to take the risk on the trade, just in case something happens.
Right.
Do we get any smarter once the trade is on? Do you find it difficult to accept information that the market is telling you that may be contrary to what you think while the trade is on?
Okay. So it's important not to marry to a direction or what's happening in the market. You don't know. You have to have the assumption you do not know what's happening till it happens. The market is what it is. So you don't want to pre presuppose presuppose what it's going to do. You want to look at everything you can to give you certainty that it's doing a particular thing. So don't have in your mind this is a short and it's going up. It's everything is showing you that it's has an up move, and you have in your head, you're stuck in your head, it's a short.
Mm,
So don't marry yourself to a thought that is not backed up by what you're seeing on the screen. Don't marry to a thought or a direction. It is what it is.
okay.
Read what it is.
All right. So, folks, it is the question and answer time. Get your questions in. I've got one here from our good friend Shubham. Uh, every time I hit my target, I get protective and I don't want to give anything back. Is this mindset limiting my long term growth as a trader? Great question, Shubham.
Well, you should always lock in your cash, and you should always be protective of what you've locked in, but not to the point that it inhibits you from taking another trade. And when you have a stop, or you have a stop get hit, I can't tell you how many people don't get back in if it's working. You can get back in, but they're challenged to get back in because it wasn't the original trade. And so if you get stopped out because you moved the stop too much, go to yourself, okay, that got hit. Where can I get in again? Forward thinking, where could I get in again? And so look at where you could get in again to re-enter. Re-entering quickly is not a bad thing if the setup is originally there. And protecting your capital is okay, but not to the point that it freezes you up from doing anything. So you have to look at, is it emotionally keeping you stuck, or not. Protecting your cash is always important. Set a goal for the day that you know you can make. I always say only lose what you know you can make in the day. Otherwise, it costs you more
Mm-hmm.
than one day's work. So
Mm-hmm.
set a goal for the day, and then go to sim or go to practice mode. Watch the markets, and it's too boring. I want to trade. No, don't get sucked into having to trade. When you're new, the best thing you could do is get your disciplines in control. There's not one book that I know on trading that doesn't have discipline 100,000 times in it. Discipline is the thing you have to manage. So the more you can practice that, walk away. Great traders know when to walk away. If you're off, if you're trading really crappy and you just are not on, it could be you, it could be the market, the way the market's reacting today. It might not be your market, maybe it's the wrong market you're trading. Don't switch between markets. I always suggest staying with one to learn the personality and stay with that market. And if you're off, you're off. Go to sim or walk away.
Uh-huh.
I like to stay because I like to learn something. Even at this stage, I like to learn something. Is there something that I could learn today? So stay with the markets and watch that. What could you do now? He identified the problem. Now he should think about what's the solution
The solution.
and what's the action he could take to fix it. If you get in that pattern, you're coaching yourself. You don't even need me, but you have to do it.
Mhm. Right. Uh, Robin, just real quick, would you suggest to Shubham? You know, he's got a good trade. He's gotten a profit target. Would you say take one more trade? Look for the next good trade. Take that one more trade, and if it's a winner,
Sure,
that buys you another trade. You've talked about that before.
sure. Yeah, I always like to earn my way to another trade. So if I have a winning trade, that earns me the right to take another trade. If I have a losing trade, I got to stop. I got to examine it, figure out what I did. And I sometimes will give myself one more trade. And if I can't make money on that next trade, I'm off. I have to examine it,
Done.
switch to sim so I don't give back my money. The thing is not to build your bank account, and this is what people have been doing that that some people I've been coaching. They hit their goal for the day, and then they continue to trade and give it all back. How many times do you hear I hit my goal for today and I ended up negative?
That's right into our next question, I think.
Okay.
Smooth AF. Nice chat name. How can I maintain the right mindset when I've been profitable all day so I don't fumble opportunities due to the fear of losing my profits? Exactly what you were just talking
Okay,
about,
so
right?
that's the trading game. So if you hit your
Mm-hmm.
goal, allow yourself, you can create any kind of game in trading you want. It's all up to you. I'm just giving you suggestions. So if I hit my goal for the day, I get one more trade. I don't increase size. I stay with a small size. I take the trade. If it's a winner, I can continue. If you're winning and you're on a winning streak and you have winning patterns, I want you to trade. It's when you lose that I want you to control it and not give it all back. Don't hold on. Give yourself a dollar limit if you have a negative trade after you hit your goal. So if you go down X amount, that's when you're going to cut it. Have a place where you switch to sim. You either stop for the day, you go to sim, and then in sim, you earn the right to go back to live trading. Maybe you take 5 trades, or maybe I, when I get down to before I blow a valuation account, if I'm down to $100 left, I go to the micros, and then I give myself, I have to make $500 in sim before I can even trade live in the micros. Because if I trade, I'm going to blow the account. So I put a game in place when I'm close to critical levels of my profitability, or if I'm going to run the risk of blowing an important account. So you can create any game you want. The key is to create control. Only you know how you think when you trade. I don't know how you think when you trade unless you talk to me. Hogue doesn't know how you're thinking in the moment. Only you know you. Great traders know themselves. They've learned how to read themselves. They can feel. You can feel when you're off. You can feel
Mm-hmm.
when you're not trading well. You can feel it in your body. I know you can.
Mm-hmm.
You can feel it in your body, and you got to say, "Oh yikes! I don't feel good." Get up, take a break, go to the kitchen, get yourself a cup of coffee, a glass of water, something to break the losing pattern. Getting up and moving is one of the best things that you can do. And H2O, always have your H2O because your brain is on hyperdrive.
Stay hydrated.
And stay hydrated. Okay.
Some people want to know where you got your shirt.
In New York. In New
Where
York,
else?
put it on just for you. It's my Wall Street. It says Wall
The Wall
Street in New
Street
York. I
Bull.
got it in New York. Yep, the bull, the famous bull.
All right. One of my good friends is asking, I think, a very important question. What are some effective ways to not allow trading struggles carry into your personal life?
I think it's reverse. How can you not let your personal life slip into your trading? Because it starts with your foundation, and the foundation that you have in your mind comes from your personal life. So a lot of times I'll coach traders, and I can feel that something's not right. And when I dig a little bit, find out it's a personal thing. It's not anything to do with trading. So trading brings to the surface all of your personal emotional baggage, and it makes you deal with it whether you want to or not. So all
I like
your
that. Very
personal
well put.
stuff is coming to the surface when you trade. And so I have a group of I'm giving you statistics from the questionnaires that I've been answering. I've got a lot of successful people, had successful businesses in the past. They come into trading and they get hooked. They get hooked because they win early on. I, that's could be the kiss of death. So they think it's easy. Oh, it's easy. I'll just double up on size. So what do? When they're losing, they double up on size and they go down faster. Never double up on a losing trade. Rule, major rule. Never double up on a losing trade. So if you're going along and you're I forgot what I was the point I was going to make. It'll come to me. Okay. So um be careful of your I forgot what I was going to say. What were we talking about? What was the question?
Not bringing your trading anger, not bringing
Oh,
anything that happens in
personal
trading into your
personal life.
personal life.
Right. Okay. So if you're trading, you have to examine what is bubbling up for you. So I was talking about high-end traders. They have a business, they were successful in the business, they came to trading, they win early on, and then they can't seem to get it. And so they're frustrated because they were successful in their other business and now all of a sudden they can't seem to grasp this. There's a lot of things to learn in trading. And so if you're new, you have to get your foundation. Please have a plan. When I get these surveys and I see people, I I sometimes have a plan. I have no criteria and I don't use my stops. Those three areas: plan, criteria, stops. That's the foundation. You have to have a foundation in your trading. Make sure you've got a plan. Your criteria should be 7 to 10 parts in your criteria. I look at this, and this, and that's enough to tell me I can enter the trade. 7 to 10 parts. Don't overtrade. Traders that are new shouldn't have more than 10 trades a day. If you're over 10 trades a day, you're overtrading and you don't have it. You don't have it. You've got to examine the plan. Something is wrong. If you see people in the room that are doing things you want to do, ask them what they're doing. Ask them what they're looking at specifically, because you're seeing the end result on the screen. You're not seeing what their head is telling them. So you've got to ask them, what specifically did you see to exit that trade? Was it just that level or was there something else? Oh, yeah, I looked at the dome for a second and looked at volume. Or I looked at time and sales for a second and I saw selling orders come in. Or I looked at this on the moving average and I realized it hit that. So they may see something out of the corner of their eye with all the windows that they're looking at, but they don't explain it in the room as they're trading. Ask them for the specifics. That will give you some of the statistics of their criteria. And for successful people, you've got to have a plan, criteria, and a stop. That's the foundation. And if you don't have that, you got to work on that.
Thank
Okie
you.
dokie.
War Knights has a question. Every time I almost reach the goal, I fall. Using another word, FAIL. I don't like to use that word
Okay.
because of my mental breaks. How do I fix that? Getting right up close to that goal, and everything falls apart.
Okay. So is it a daily goal? a trade goal, or while you're in the trade goal? Give me more. Where is the goal? Is it a daily goal
I would assume
for the
it would
trade?
be let's just say a daily profit goal or a
Okay.
trading
So,
combine success goal.
okay. Um, you should have you you don't have to have a goal for the day per se. You figure out what you should be making in the week, divide it by 5, and figure out about what you want to make per day. You're not going to make the goal exactly that for the day. You could be less, you could be more. If you're trading well,
Mhm.
you trade more. If you're trading less and you're losing, you want to stop. So during the week, you're going to have ups and downs, but at the end of the week, what was your average? And so look at your average. Don't stick to a goal. So by having a goal and not hitting it works against you. Will you feel better in the morning not hitting your goal? Or will you feel better in the morning if you just said, I had a great trading day yesterday? So don't attach it always to a solid number. Have Be flexible. We have to be flexible in trading. We
Mhm.
can't we
Mhm.
if we had one plan and one thing worked all the time, we'd all be trading it. It doesn't work that way. We have to be flexible with our plan, the market, with what's going on, our indicators. Everything has to be flexible and it changes.
I always tell people when you're, up near the combine profit target, forget about it. Just look for the next good trade. Nothing that
Okay,
has
one more thing.
happened has anything to do with what's going to happen. You've got to be in the moment, in your process, looking for the next good trade. Go ahead, Robin.
Okay, one more thing that he's doing incorrectly. I'll put money on it. If you're close to your goal and you start to emotionally get thrown off, for lack of a better word, it means you're looking at your P&L. If you have your P&L on the screen or something that gives you a dollar amount of what you're making on the screen, take it off and put a post-it note over it. Do not look at a dollar amount. Switch it to ticks, switch it to anything else, but not the money. Our mind reacts strongly to money. And so if you're looking constantly at the goal and you're not focusing on the trade, if you cover up the dollar amount and just focus on making a great trade, you'll go over your goal before you know it, and you'll be fine. Don't look at the dollars.
Right. Yes.
Bad habit.
And I think Soban has a question in the chat here is asking, how can I control greed, which eventually turns into revenge trading, eventually turning into a losing trading combine. And I have lost a lot. You're
Put a
focusing
hundred
on the
dollars just
money
looking at
instead of
the
the,
money. Yep.
yes. Yep.
Focusing on money is horrible for a trader, just horrible. And I can't tell you how many people do it, especially in the situation where you have contests and goals in the room. That's causing you to do it. Look at the end of the day. Look at the end of the day. Be surprised at the end of the day. Have all those winning trades, controlling those losses, and then pick up your post-it note, look at your dollar amount, and go, woohoo! I didn't even know I could make that. It will disappear. You won't even you will It will just disappear. Focus on the quality of the trade. Quality of the trade. And money's gonna
One thing
follow.
you can
Get
do
the money out of
is
there.
change your platform from showing you the money for each trade to showing you the ticks.
Right.
Showing
Absolutely
you the
agree.
ticks. All right, I think we've got room. I think we have time for about one more here, Robin. So,
Okay.
okay.
And thank you so much for
Lissy.
doing this.
Oh, it's our pleasure. It's my pleasure. I love every time I get the chance to have you on, spend some time with you. Lissy's asking, do you ever dig into the why of why a trader can't stop taking bad setups, etc.? Perhaps they have a real problem with greed, for example. Do you ever dig into why they feel greedy?
Oh, my whole business is the why, finding out the why. That's my whole business. So, of course, I'm the master of questions. So, if you ever do coaching with me, I'm the master of questions, one question after another. That's how I uncover a lot of times that it's not the trading, it's something personal because it's coming from something deeper. So, yes, absolutely. And it's a great question that you can ask yourself and keep digging till you find the answer to your why. Why do you think you're doing that? Why do you think you keep repeating it? And so it may bubble up, I'm greedy. It may bubble up, I'm stressed because I have to pay the rent. I'm maybe bubbled up because I'm late on a bill. It may bubble up, it'll bubble up all sorts of things that I'm not feeling well. My mother's not feeling well. My brother's not feeling well. It'll bubble up something. You figure out your why. Can I make one quick statement? Um,
Of
I
course.
had I have a lot of traders that filled out questionnaires over the past couple months. I'm offering a $200 discount to the traders from May if they're going to do a coaching 3-pack with me. So all the
Okay.
traders that put in surveys in May, you get an extra $200 off because you should have been doing um, a follow-up call with me to see what's going on, but there's a lot of you in there that need to get coaching. And if you're still losing from May, you really need to call me because there's a whole bunch of you in there that I'll put money on are still losing from May because you're stuck and
Okay.
you haven't figured out your why.
Thank you. I just put the link to your website in the chat.
Yep.
I was going to put the link to the emotional trading test in there. Can I do that as well?
You can do it. It's on the page. It's in the top corner. I get
Yeah.
deluged with it, and it takes me a while to do them. But yeah, you can certainly do that. Everybody knows I read each one separately. I know they're the same questions, but I they're in a specific sequence, and I can tell what's going on with the trader as I go through the questions. By the time I get to the end, most of them are dealing with blocks, emotional blocks that they've built up over
I don't
time
want to. I don't
from
want to. I
losing.
don't want to get you too busy now.
No, I know. I know, I don't either. And then the
You
other
know.
thing I suggest is go to the media section of my website, and there are some presentations on there. There's one that is like 7 hours long. I'm I'm an hour within that. You just scan forward and you can see where I am. You can go
Got it.
through all those webinars. You can go on YouTube and go through those webinars that will give you an idea of how I coach. All my information doesn't change. All the emotional stuff that happened when I was in the 80s is still happening today. So there's all that is valuable information and the ones on Top Step.
Just so you know, that emotional questionnaire. She goes through those personally and goes through them and deciphers them. This is stuff that people don't really do. Robin, we can't thank you enough again for being with us. It's always such a pleasure to have you here. If you have
I
one
hope I
closing
hope
comment
I
for everybody
added
before
value.
we move on.
Yeah, I hope I added value. I had a little quote that says be strong but not rude. Be kind but not weak. Be bold but not bully. Be humble but not timid. Be proud but not arrogant. So I'll leave you with that quote. And thank you everybody. Thank you Hogue for doing this. I love being with you guys. Um, ask me any questions that you want. I'm available. And if you need coaching, it's better that you get rid of the block now than carry it with you because it's the number one reason that traders fail. Unfortunately, I had to tell you something
Thank
different,
you,
and I'm not looking to sell
thank you,
stuff, but
Robin.
it's the number one reason. Have a wonderful day.
Absolutely love that quote. Thank you very much for that. All right, folks. Next, we got Coach Dakota returning.